Good morning, guys. I'm sorry to not come to you live today. I'm doing this as a recording as I am not feeling the best. So I just wanted to provide you with a quick update on what has happened post FOMC and what my thoughts are next. So if you are new here, welcome. If you are returning, welcome back. Let's smash this out. First things first is we had a fairly big overreaction last night. To the FOMC announcement, we had a very typical market maker play where price broke out to the upside first in the last 15-minute candle. If you've been watching me for a while, you know that is the market maker building shorts whilst triggering retail longs. From breakout traders before they reverse the market the other way. So what they essentially did here in this move was they triggered, they triggered breakout traders' long positions whilst also stopping out anyone who was short but actually correct, and liquidating those people. By liquidating them, they accumulated their contracts, then they dropped price down the other way. At the same time, at the bottom of that, the same thing would have repeated, and that's why we closed with this big wick on this red candle right here. So there would have been positions down here for them to pick up, at the same time liquidating these longs right here. So shorts get liquidated on this way up, longs get liquidated on this way down, then they're free to move wherever they actually want to move. Now the problem that we have right now is that in the dead gap zone currently, we have closed below the previous W formation that we were watching on the 1 hour time frame, that we wanted to see if this would be a 1 hour W that was forming. There is a potential, it's way too early to tell, but this is what I would be watching for. There is a potential for this to still be a final damage W, where the second peak forms lower than the first peak. So what you would have to do is watch the close of the 1 hour candles, see if you still have, really decent wicks, similar to what we have going on right now if this candle was to close this way. However, I want to see it turn green, and I want to see, that there are buyers here. I don't really see that. There's low volume. We're in the dead gap zone. It's a bit untrustworthy, but that's kind of what I want to see. So when Asia opens, if we don't break lower than here, if we settle and we start to see on the 15-minute time frame some pretty decent hammers, or we move sideways in a range for at least a 90-minute period, then I would say that this is the low and we may continue up from there. Now, if you want to take the safer play, however, because it was such a dramatic move yesterday, the safer play would be your first step, but you wouldn't enter a trade there. Where you would enter a trade for a more conservative entry is to wait for price to come all the way back past the 50 EMA, retest it, and then your entry is there. Now, by the time all of that happens, the 50 EMA would move down. So price and the 50 EMA would, sort of catch up to each other, and you may end up with an entry, something like that. That's going to take more time to happen, however, so you've got to keep that in mind. The other thing too is then it's probably a smarter way to do it if you're thinking that this is a W and we'll continue up from here. The reason I say it's a smarter way to do it than taking along from here is because what could happen is that this move up here is only a retracement from this move down here before we actually move further down. And the way you're going to know that is the same thing. So the 50 EMA will continue like this, but this time when price gets there, it can't cross it and it rejects underneath it. So the moral story is, if you're looking for a trade today, the 50 EMA should be your telltale sign. If we get above it, great, we're recovering. If we reject underneath it, we're probably going down further. Finally, let's talk about the cost to mine numbers. So this 18,351 is one of them. As you know, I have two cost to mine areas based off two different websites. At this point in time, I'm unsure which one is more correct. But at this point in time, the 18,351 has been holding. We do have a 10% buffer, so we could go 10% below that, which would put us into this lower one anyway. So still watching those levels, but at this point in time, they're holding, so that theory is still in play. But yeah, really want to see Asia push us out of this if we're not to be going any lower than this. Now, I want to talk about this, what happened here, because besides us knowing that it's a typical market maker play and that they were triggering orders before sending price the other way, how do you get the hint of what's going on? So I wanted to show you actually this heat map here, because this shows you very clearly what had happened, and where the liquidity was for the market maker yesterday before they made that sharp move. Now, as you can see from this slider here on the side, the more we head closer to the yellow color, the higher the level in one price range of positions to liquidate. And so you can see that we had this high amount here in yellow at around 19, hang on, where is that? Yeah, 19, is that 19? Yeah, 19.5, sorry. It's too early for me to look at numbers that small. But yeah, around 19.5, say 19.6. So by spiking up here, they took those out. Then down here, we had more as well at 18.6. So they reversed it back and took out that. So in one candle, they essentially took out both sides of fairly high liquidity. And then, it's now game on, and we're back to normal. So if we want to have a look at what is available now in the current price range, let's just zoom into this area here and see what's going on. We've got, a very high level here at 17.17. Don't mean to scare you, but just pointing out that it's there. There's this, which is, excuse me, fairly significant at 17.4, but then above price, we're fairly far away from price. We're getting back into the 20K again. So if we reject under that 50 EMA, that was probably going to be a good area to short. Yeah, providing price doesn't cross back above it with those 17K-ish numbers as target. And if, let's just say the bottom is in, it is a little bit too early, but if we draw fibs on this move to where this candle is right now, we can see here that the 50 EMA also lines up with 50 fibs. So that's definitely what I would be watching for today. I'm probably not going to trade today because I know not to trade when I'm not feeling well. But if I was on my game, I'd be looking, the 50 EMA is going to be my telltale sign for the day. Now, let's quickly have a look at what Ethereum did. So Ethereum pushed right into our area of interest and rejected right under the 200 EMA. I'm actually kind of glad that I wasn't awake to trade this. Would have been a bit hectic. And now we've broken well below that W. So that's done now. That move to the upside is definitely done. And yeah, things aren't really looking great. So down here, we do have a daily vector that ETH would be currently recovering. And that is this one right here. We are more than 50% recovered of that for sure. So it may continue down. That's sitting at around 1190. And if it does a full recovery and continues from there, then there are two more vectors in that daily W that it could come back to. But when you really zoom out on Ethereum, it just doesn't overall look good, because you can see that both of these peaks here have rejected even attempting to go into that previous channel. So it's pretty bearish, but it could be bearish only until it finishes the recovery of that daily vector. So definitely 1200-ish. Is that 1200? Yeah, 1190 is the area to watch for Ethereum. Now that we know that, if we go back to, let's have a look at the 1 hour. Yeah, it's still going to be the 50 EMA for me. So, obviously can't short from here. The move has already happened. But if I was going to remain bearish, then I want to see price retrace. I want to see the EMA, where's my pen tool? I want to see the EMA continue down like this, and I want to see price go up like this, fail to cross it, and then I'll be, fairly confident that we're going down further, or it gets back above it, it retests it and holds successfully, and then I would say we're going to recover to the upside for the short term, which would be our midweek reversal into, end of week tomorrow. So those are my feelings on that. The 50 EMA on both of these is your telltale sign. Let's have a look at, excuse me, the heat maps quickly. I'm trying to not cough so that I don't have to edit this and I can just get it straight out. So, excuse me. Okay, so we can see here that we've got, again, just a reminder, we're in the dead gap zone, most highly manipulative zone of the day. So massive shenanigans will be going on. You really need to reassess what Asia does when it opens. But at this point in time, there are shorts within the current 4-hour candle at 18,500 trying to keep price down. That's never a good sign when I see shorts within the current candle or high level. Like, I'd like to see them above the current candle. The fact that they're within it and they're towards the bottom of it tells me they want this much lower. And then we can see the buys are down here at around 17,850 to 18K-ish. So yeah, that's not looking great to me. But what I'm going to do, I actually want to turn on the footprint to investigate this a little bit further. Let's go deep into this candle and see what we can see going on here. I will remove the candle. So, okay, so this is when we see at the top of the candle, we see more buys than sells. That's not clever money. That's people trying to basically pick the bottom and buy. So that's not ideal. What we want to see, if smart money was coming in, we want to see the green down the bottom of this candle, and we don't have that. It's very empty. So something like this, for example, see how green this is here? You'd want to see that sort of green at the bottom of your footprint. We don't have that. So this isn't looking good, is the moral of the story. Again, though, remain unbiased until Asia actually opens. So what I would be doing is what I said in the beginning of this video. Wait for Asia to open for both of these. Wait to see if the low of the day is in for the day after Asia opens, and you're going to know that if it holds sideways around these ranges for at least a 90-minute period. And then, yeah, we're potentially looking good. But use the 50 EMA as your gauge for today. I hope that was helpful. Sorry to rush this. Sorry to not be able to go live. I won't see you now for the rest of the week. But have a great weekend. Trade safe. And smash the like button if you enjoyed this. And leave me a comment below. And I will see you next week.